Well, one day off, but we're really happy that Mike Giordano with Williams Wealth Management, our own personal financial advisors here, because this first question, Mike, is one that I actually sent to you last week because I'm like, Mike, I just read this. What in the world does this mean? The IRS this week is delayed forcing people, older people, 50 and up, to catch up on their contributions to a certain kind of 401k. So I just kind of went to you and went, wait, what is this? What is this?
Yeah. So basically, when you put in money in a 401k, typically you put in a traditional 401k, you get a tax savings on the front end, right? But there's Roth-style ones now in which you don't get any tax savings today, you get your tax savings in the future.
Okay.
And so the IRS is basically going to force people to, put their catch-up contributions, individuals 50 and older, put their catch-up contributions in that Roth style, so they don't get any tax benefits. And so what they said is, instead of doing it now, they're going to delay it for a couple of years. So it gives you a couple of years where you can still put them in Roth style, but you can also put them in pre-tax, get your tax break today.
Okay, so if I'm worried about that, what do I do?
Yeah, well, I mean, the good thing here is you got 2 years of planning to think through it. But it's really important, the planning stage, because, different accounts give you different advantages. And traditional types of 401ks, IRAs, they give you the advantage of being able to get the tax break on the front end, whereas the Roth-style ones give you the tax break down the road. So sometimes a little mismatch of both of those things can be helpful.
Okay, that's perfect. So does it make sense to invest retirement money in a taxable brokerage account?
Yeah, it can. So basically what you're trying to do is, if I had 3 different buckets here, you're going to have some money that you want to get the tax break today on, and that would be money to put in a traditional IRA or 401k. There's money that you want to get the tax breaks in the future, and that's what the Roth-style accounts do. The taxable brokerage account basically gives you the flexibility. You don't get as many tax advantages. That's the negative of it. The positive is that you get more flexibility over when you want to use that money. So if you put all those 3 buckets together, then you have the opportunity to manipulate your income and thus your taxes year to year based on what makes most sense for you.
And that's the beauty of it too, because everybody's going to have different concerns, and your concerns are going to change as you get older.
Right.
So that makes a big difference.
Right. So with tax advice, it definitely is very specific to each individual, because everybody's got different needs, everybody's got different goals, everybody's got different lifestyles. The main thing you're trying to play here is you're trying to figure out, where do I get the best tax advantages? And so in general, if you're in a higher tax rate today than you think you will be in retirement, then it makes sense to take the tax breaks today, and that's where traditional accounts make the most sense. If you think you're going to have a higher tax rate in the future, then it might make sense to take the Roth-style accounts, Roth-style contributions, and then get the bigger tax break in the future.
And that's why we need a financial advisor to help us with those things. Now, one thing I'm always preaching to my young colleagues is, you're never too young to start putting money away in a 401k. Is it, looking down the road at these investments in retirement and all of this kind of stuff, you're never too young to start that.
No, I mean, and at the end of the day, if you're saving, that's a great thing. There might be better ways for you to save. So the types of accounts really matter. But it's never too early to start, because at the end of the day, the most important thing in financial strategy is proactivity. The longer time frame you have, the less harsh the moves you need to make to get yourself in the best position possible. So if you're early out, just starting in your career, you've got lots of time. So if you kind of map out your strategy, then you don't have to make major adjustments, and you can get yourself in the best possible position.
Excellent. Just get started. Just do something.
I know. It sounds hard, but it's simple.
It is easier than it sounds.
Yes.
And then the beauty of that, I can attest, is like 30 years down the line, you go, oh my gosh, really? I saved that much money? It didn't really hurt that much.
Yes.
Mike, it's always great to see you. Thank you so much.
A real life example.
Yes, exactly. Here she is. Mike Giordano with Williams Wealth Management, our financial advisor. Thank you.